The cyber risk landscape continues to evolve rapidly, with ransomware attacks and business email scams increasing, as well as new threats emerging. This puts cybersecurity and protection in the form of cyber insurance high on every business agenda, and rightfully so. Some argue that the cumulative capacity needed for cyber insurance is bigger than for Netcat. In this talk show, Matt Ferguson, managing partner at Sonar Global, together with his guests, will explore if cyber is the greatest threat or the greatest opportunity for P&C insurers.
Did everyone have a good time last night? I'm not seeing some too tired faces in the audience actually, which is a surprise, or maybe I feel a little bit disappointed actually. I don't know, that's bad. And I also look at my panelists when I'm saying that too. But listen, lovely to be here. Thank you for your time and attention. My name's Matt Ferguson. I work at a business called Sonar, where we track amazing startup companies all around the world and help our customers understand the trends that they form a part of and what they represent. And I'm really pleased today to be on stage. We're going to be unpacking a pretty broad topic. And this is probably the point at which I get quite confused. So if I read the headlines, there's a lot of kind of horror stories. You know, there's a market that might grow at 15, 20% plus, could be in excess of $400 billion in the next few years. Hackers, scammers around every corner, constantly assaulting businesses, and the threat of a potentially life-ending cyber attack, a matter of when, not if. On the flip side, if I see some of the most recent reporting, actually the sector's profitable overall. Loss ratios seem to be under control, and some relatively simple things can be done to mitigate a large proportion of some of the challenges. And so hopefully you can see my confusion, which for a lot of people, if you know me, that's not an uncommon occurrence. But the good news is we've got two absolute experts to help me to understand, and hopefully you guys too, what's going on. So Pascal from CyberCube, Gil from FinTLV. Guys, thank you so much for coming along. Big question, and maybe let's unpack it into three parts: opportunities, threats, and the sustainability of the sector. And maybe Pascal, if we try and kick off with, look, if that's the context, what are the opportunities in the space, and then let's go on to the challenges and sustainability. So what are you seeing?
Sure. Thanks for having me. In my perspective, cyber risk isn't just an opportunity for insurers. It may be the largest opportunity that has come along for P&C insurance in generations. If we look at a typical enterprise today, cyber risk will often be the number one risk on the minds of the enterprise insurance buyer. And that's just today. If we project out to the world into the future, 5, 10, 15 years from now, with IoT, the continued explosion of data, AI, and frankly, all of the things we've been talking about in this conference over the course of the past couple of days, we're just at the very early days of internet-connected technologies being absolutely critical to the global economy. So as a result, we've seen explosive growth in this market. 15 to 20% would be the lowest growth we would have ever seen in cyber insurance in a long time. It's more like 25 to 50% growth. And current projections by Gallagher Re put cyber reinsurance being larger than Nat Cat reinsurance in the early 2030s. And by 2040, Jeffrey's estimate for cyber insurance puts it at 30 times what it is today, and one of the largest lines of insurance in P&C insurance globally. So yes, there are challenges. Yes, there are threats. Yes, there's a lot of work that needs to be done. But as we think about the risks that society faces in the 21st century and the role of insurance as risk transfer providers, there really isn't an opportunity that I think we should be more excited about in cyber.
Fantastic.
Yeah. I totally agree, Pascal. Pascal is one of the knowledgeable people in the industry about cyber. I can give you my overview just to say that as a venture capital fund, we invested in a company called Corvus. It's one of the leading insurtech companies that is running a very big business on cyber insurance. And I can tell you guys that everyone in this room, which is coming from an incumbent or an insurance company, should look at cyber as one of their biggest opportunities in the market on one hand. But as Pascal said, the major challenge for this opportunity is the systemic risk, which we haven't touched yet, and we will touch later on this discussion.
Yeah.
But this systemic risk is providing let's say the black clouds above the cyber insurance business. But on the other hand, the opportunity is there. All the technologies that we are now using are building more and more needs and market for a cyber insurance practice. And that's where we are.
Okay. So huge market potential. Where specifically, where do you maybe see the most opportunity? Is it easy to pinpoint?
Yeah.
Precise areas for?
I'll give my 10 cents on this because every large corporation has the understanding that he needs the cyber protection.
Yeah.
But the big gap, I think the biggest gap in the industry, and this is where the opportunity lies, is on SMEs.
Okay.
Because what we have seen is something that will amaze you. I think 90% of SMEs are unprotected.
Yeah.
Which means they're not taking any risk mitigation factors on their business in terms of cyber. Let's put it on this side. On the other hand, 60% of these SMEs that are being attacked, they never come to business. They never return to business.
Yeah.
Which means that the results of an attack could be so severe, it might wipe out the business.
Yeah.
So this is where the opportunity, the underinsured huge population of SMEs that doesn't understand how much and deep they need this protection.
Yeah.
This is the protection gap.
Yeah, I would agree that some of the largest opportunities are with SMEs, both in terms of not buying cover, but also the incredible role that insurers can play, not just in providing risk transfer, but providing really valuable pre-breach and post-breach
Right.
services to those organizations. But in some ways, there's absolutely opportunity everywhere. SME, large corp, Europe, US, rest of world. Today, over $1 trillion a year is lost due to cybercrime and internet-connected technology failures. A low single-digit percentage point of that risk is covered by an affirmative standalone cyber insurance policy today. The challenge is not enough businesses buy cyber insurance, even though they really should. And in fact, Europe is a far less penetrated market than the US in particular. Those that do buy aren't buying large enough limits if they're a large corpse. And often that's not because they don't see the need or they don't see the value in insurance products. It's just that the insurance market hasn't grown rapidly enough in order to create the towers that hit the multi-billion dollars of exposure that they have. And so if you're an insurer looking at markets where typically mature lines of insurance might struggle to grow at the rate of GDP, here the underlying risk is growing so much faster than that, and the risk is underpenetrated today, which just leads to the sea of opportunity and why those growth projections for cyber are indeed so high. Now, at the same time, insurance executives can get pretty concerned about cyber insurance policies, and you certainly don't want to be providing expansive cover that you don't understand with wordings that are effectively covering anything and everything that could possibly go wrong with a computer. That's really not an insurance that's built upon a deep understanding of the risk. But the risk is so large, the risk is so broad and so important that there are so many pockets of opportunity that if you're an insurer, picking those pockets and developing a strategy to provide needed risk transfer solutions to those pockets, to those segments with exposures and wordings that you understand is an incredible once in a generation or once in multiple generations opportunity to this industry.
Yeah, and let's add to this the complexity. If you're an insurance company and you insure home insurance, auto insurance, commercial insurance, you have a claim, something has happened, and now you need to reimburse or take care of what was happening. Okay? This is simple. We know how to handle this, and this is the procedure. But cyber is something that is moving on. You have a claim, and this claim is now, let's say you have an event in a company. This event can deteriorate even after discovery. If you're not taking the right measures, the post-breach and all the activities that you can do to stop this event from proceeding, it will get bigger and bigger and bigger and bigger. Even it's already started and you know it started. It's not like a car accident was happening and now this is the situation. Mm-hmm. It cannot deteriorate more, right? Okay. And this is the complexity because you need a very diverse solutions for these insurance companies to handle both the risk side and also the post-breach and what happens with the claim.
Okay. And in my mind, that's actually one of the big untold success stories, or not told enough, of cyber insurance is not just the risk transfer and the payouts that's happening, but the incredible service that comes post-breach, right, or post-ransomware event, or post-business interruption event. If you now look at this market and look at some of the largest players, they have paid out hundreds, in some case, in excess of 1,000 claims. You now compare that to the business who is having a potentially existential moment because they've been breached, because they've had a ransomware event or a business interruption event. What that insurer is able to do in the first 24 hours in terms of marshaling incident response, crisis communications, forensics, regulatory engagement, those that can deal with the ransomware, those demanding the ransoms, is really an incredible service. And if you compare and contrast enterprises that have experienced a breach, that have insurance, and those that don't, the difference is not just the reimbursement. The difference is they are so much better equipped to handle the fallout that comes. So I'm excited about cyber, not because of the market opportunity, not just because of the risk transfer, but because of the incredible value that insurers are providing to clients when they need it most in a way that is super distinctive.
And it's not all about premium. That's what I'm saying, exactly. You can get a lower cost, but much different services that will provide you the right risk prevention and the right risk mitigation after a breach. It's a different story.
Okay, so I'm listening to all of this. You've got an overall market size that's an opportunity, it's enormous. You've got a market, specifically SME, which represents a huge swathe in almost any market of massively underinsured. Value for customer, value for insurer. The question I'm left with is what are the challenges? What are the problems? Why isn't this flying off the shelves? Is it insurers not packaging products? Is it consumer or customer awareness of the need? It's an amorphous concept. I don't get it. It's down on the to-do list. A cost issue. What is it?
I'll ask the expert. I think the major issue, you tell me if I'm right, is the capacity, right? Mm-hmm. So let's discuss about systemic risks.
Yeah.
You want to start?
Sure. Well, first I would kind of caveat your question by saying the market's growing really rapidly. I mean, this is a market that is doubling every 3 years or so. This is a product that barely existed in Europe when I first started coming to DIA, and is now increasingly a staple or a new line being launched by European carriers.
But
so I would say
sometimes it doubles only because of premium rates and not new customers.
Sure.
Okay.
Sure.
Okay, that's interesting.
Fair point.
Yeah.
But capacity is absolutely an issue.
Okay.
And one of the drivers of capacity and reinsurance capacity is understanding the tail risk and understanding what are the catastrophic aggregation scenarios that could occur and the amount of capital that needs to be held against those scenarios. Now, what I would say is in the early days, reinsurers and insurers, but particularly reinsurers, were really concerned about this issue. So back when CyberCube was still a part of Symantec, a Fortune 500 cybersecurity company in which we were incubated, the first problem that we tackled in a development partnership with Guy Carpenter was the issue of accumulation and cat risk management. And what we've found in the 7 years since we've been modeling cat risk and doing cat modeling for the industry is the internet is far more resilient than one might have expected. One of the reasons for concerns with reinsurance capacity was almost this mindset that someone was going to trip over a power cord and the global internet was going to come down. That's not the way the internet works.
Okay,
fortunately. Yeah. That's not the way the internet works. We've tracked over the last 6 years 100 mini cat events, near misses. There's about one a month, and typically they result in minimal insurance losses. About once a year, we see, as we look at our clients, which include 22 out of the 30 largest cyber insurers use our analytics, about once a year, we see an event like Blackbaud or MS Exchange, where there's a single-digit impact on industry loss ratios. And in the last decade, we've seen one cat event in terms of NotPetya, which was an attack by the Russians on the Ukraine that led to collateral damage that led to around $10 billion of economic losses, predominantly against European enterprises. And so I would say capacity remains a challenge. However, over time, I think reinsurers in particular are getting more and more comfortable understanding, well, what are those cat events? What are the ones we need to be most concerned about? And as we think about the scope of an insurance policy, let's make sure that we're not covering those events. And so, surprise, surprise, some of the same conclusions that were reached in other lines of insurance over hundreds of years are the same conclusions that we're reaching today, which is the insurance industry does not have balance sheets large enough to cover outright war between nation states.
Yeah.
CyberCube worked with Lloyd's to develop their RDS scenarios on cyber cat events. And like many of our clients, that has translated into a better understanding of what should be included and excluded from a cyber policy. And so I think as we get more comfortable with those tail events, as we get more comfortable with what can be covered by the public sector, and even engage in debates, as CyberCube's engaging on what is the role of the private sector to cover that most extreme risk. There's more and more capacity coming into the market. and that capacity is fueling the growth we've been talking about.
Yeah, wonderful. I'll give my 10 cents on this. I agree, of course. I want to give examples. We have seen some very large events that haven't been developed into highly costly events. Let's take an example, Log4j, for example. It could affect the whole industry, the whole, every computer in the world, but at the end, the costs of this systemic event were very, very, very limited. On the other hand, we have seen some big events like Petya and not Petya, which we need to differentiate between these two. One was ransomware, and one was just providing damage, different stories. And when you have ransomware and someone is looking to get the money behind it, it's a different story than other solution, other threat that someone wants to wipe out your systems without taking any money, and this is a much, much more severe situation. And this is why the NotPetya event caused like a $10 billion in damages. Now, having said that, what we have seen in NotPetya was in 2017, if I'm not mistaken. So we have been going through there 6 years ago. And we have seen some big events like, I don't know, Log4j, all the SolarWinds, etc. But I think that since then, we have more diversified systems. We have more cloud providers. We have more CRM systems. We have more and more technology underlying that are disconnected from each other, which reduces the systemic risk in these systems. And I think this is part of the solution. And as Pascal said, we also see what the big giants, or Lloyd's, for example, which is taking out of the coverage the risks of states attacks. And so we have some types of mitigations, but we need to find more ways to mitigate these systemic risks in order to get more and more capacity. I think this is our biggest challenge.
Yeah, okay. So what does that mean for the future? We've got, what, 6 minutes 40 seconds left to talk about, sustainability. We talked about that at the start, right? So with all this being said, what's the direction of travel? Ultimately, how sustainable is the market? What are your views? You'll maybe kick us off.
I have a very clear view. The more we move forward with our technology, the more we would need cyber protection. And every new technology that is coming to the market, it's a new threat. And it's a new things we need to protect. And now everything is over digital, and everything is with OpenAI, and everything is based on technologies, and these technologies need to be protected, and these technologies and this protection needs to have a protection gap mitigation by insurance companies. So this is the fact. Now the question is whether the pace of the needs would find the right capacity. And I think that in the near future, there is going to be found a lot of resources for this capacity coming not just from reinsurance companies, because we already see ILS transactions on parametric, on insurance, etc., which means the capital markets are starting to move towards providing capacity. And this is the first thing. And the second thing is that we're going to find a way to mitigate things. For example, the same as terror attacks, in the level of states, they might take the excess of loss or the stop loss for the insurance companies in order for them to make sure their systemic risk is on the safe side and they can still provide more and more capacity.
I think there is incredible innovation happening in the cyber insurance space, and that innovation is driving sustainability, and it's also driving profitable growth. as we think about the first wave of next generation carriers that we've been talking about at DIA for years, they were typically consumer-focused insurance institutions that were driving innovation, but the underlying unit economics and loss ratios were often challenged. Cyber looks quite different. You look at exceptional next-generation MGAs and carriers like Corvus that aren't just growing, but they're growing in a really important market long-term where the sky's the limit in terms of how big premium could get, and doing so at highly attractive loss ratios. And so as I think about sustainability, it's going to require two things. First, it's going to require really thoughtful single risk underwriting. And in some ways, CyberCube provides to incumbent carriers what many of these really exciting MGAs are doing in-house in terms of incredible single risk analytics to really drive better risk selection, better pricing, and more thoughtful selection of enterprises to provide cover to. If you're an underwriter trying to write cyber risk 5 or 6 years ago, that was an absolute challenge looking at Byzantine underwriting questionnaires. Today, you can use platforms like CyberCube to understand thousands of data points to correlate kind of claims and incidents against security indicators that might have a 3x, 7x, 25x increase in the likelihood of a claim. And then as you're thinking about aggregation and accumulation and thinking about who are the technology dependencies that a company might have, as an underwriter now, you can instantly, in an automated way, understand hundreds, or in some cases, in excess of 1,000 technology vendors used by the company that you're underwriting right away. And this isn't just theoretical information that underwriters are now empowered to make sustainable and profitable decisions. In the case of ransomware, they used it to enforce multi-factor authentication, open RDP ports, and signs of open ransomware infections that drove down loss ratios, that improved global cybersecurity, and empowered underwriters to really make a positive difference. So this market's going to need to be sustainable with good single risk underwriting. Secondly, an understanding of catastrophe risk and what shouldn't be covered by a policy. That's also an area of incredible investment and innovation. And I think the future looks really bright given all of those things.
And one more thing, like in all insurance businesses, the most important part is prevention. And when I speak about prevention in cyber insurance, you need to have continuous risk monitoring. You need to have the right measures to provide your customers as an insurance company all the information needed for them to protect themselves and make sure they are doing their measures to protect themselves in order to mitigate the risk, to prevent it, and to make better results on your loss ratios. I think this is a very important part of the process.
Wonderful. Well, guys, I think we're nearly at time. Any final tips, thoughts?
Yeah, enjoy Barcelona.
Maybe my final one might be, it's a threat, it's an opportunity. Occasionally, I come across insurers or reinsurers that somewhat want to put their head in the sand and say, look, cyber feels too new, too complicated. This isn't something that we want to touch. That's an area where we can help, bringing our expertise there at CyberCube. However, at the end of the day, if you play that out to its logical conclusion, if you're going to insure your customers' most important risks, the most important risks that the global economy faces, unless there's an internet connection involved, as we connect the internet to our homes, our offices, our cities, our automobiles, to virtually all areas of human activity, there's really not much left. So in addition to being a threat and an opportunity, it's an absolute imperative for any insurer, reinsurer, or broker to understand the risks associated with internet-connected technologies, because ultimately that is risk in the 21st century. And as the industry that creates risk transfer products, it's absolutely essential to understand, to quantify, to underwrite, to understand CAT events, both for cyber as a new affirmative standalone line of business, but also just to the future of this being a viable and vibrant industry covering the risks that matter.
Yeah.
Wow. What a closing summary. Fantastic. Guys, thank you. I think we're at time. Everyone, thank you for your time and attention. Gents, thank you very much for your expert insight. And again, thank you to you all for dealing with me while I slowly choke on stage live in front of you all. So that's great. Guys, thank you.
Thanks very much.
Cheers.